Hello everyone, this is Chris with OptionMillionaires.com. The stock that we're looking at today is Omnivision Technologies. OVTI is the symbol. Now, you already see that I have my targets and drawings on here. I'm just going to erase those, do those again. So, Omnivision Technologies, for all the technology bugs out there, the ones that like the big mobile stocks such as Samsung, Apple, and Google, and even some of the PC stocks like Hewlett-Packard and Dell. A lot of them use Omnivision's parts. Now, what does Omnivision actually do? Omnivision, they create a lot of the imaging components for the actual products that the larger PC manufacturers sell. And the stock was actually one of the favorite in the past 5 years, with, you see, the obvious run-up here from about late 2008, December 2008. We saw its ultimate low around $5, went all the way up to around $37. Let's see, actual high $37.05. So we're talking between that time, it had almost about a 750% gain. So if you were long during that time, that's great. But then afterwards, it got a little tough, and the stock plummeted all the way back down to about $10. And since then, we see that it's been going through this consolidation period. Now, are we actually seeing something here that could signify a potential bottom in Omnivision? So if I zoom into a 2-year chart here, you can see that we have this decline right here. But then you also see this consolidation. Now, if I just draw a couple trend lines across this consolidation, so across the peaks, and then also draw it across these bottoms right here, you see that we have a traditional symmetrical triangle pattern. And this pattern, if we deem it valid, so if this breakout continues, and I would say that it'd be pretty valid if we see a breakout above that $16 level, but more on that later. It would give us a price target of, if I just do the height of the pattern projected from the breakout point, and then I'll do that one more time from the actual origination, that's going to give us a breakout. That's going to give us more of a target range. So if I do these both, it's going to give us a range right here between about $25 and $26. So that would be our target if this breakout is confirmed. So you see right now at about $15.57. Now, this would be a long-term trade, obviously. It looks pretty good from a risk-reward standpoint so far. So target range is about $25 to $26. And now we actually have to look at the supply and demand side of this to see if there's actually enough to sustain this breakout. So if I'm actually looking at the bottom here, I'm going to quickly put in some moving averages on the actual stock chart volume. We see that the stock is above its 200-day, its 50-day, and its 30-day. So that's on a long-term basis. That's good, but still, we have this right here, and that is, we have an earnings announcement on February 28th. So I think that the way that this stock has historically reacted to earnings, you see these large movements on earnings days, either up or down. You really don't see these days where you don't have any reaction. So I'm guessing that the market's pretty much going to just wait for that day to come around. But let's actually look at the breakout so far. So the actual buy signal, if you're just doing traditional technical analysis, just patterns, would have right here when the price was about $15.25. However, especially when the longer term trend is down, you want to make sure that these signals are good. So if we actually take a look at the volume, do we actually have what looks like to be breakout volume? Not really. You see this descending trend line right here, descending trend line, and then on the breakout, volume is the lowest it has been since, let's see, about early 2012. Not really what I want to see. I'd prefer to see on a breakout something like wide participation in the market, so a lot of shares being bought or sold. This one was obviously being or sold, but I want to see a lot of activity in the stock. So a lot of short sellers getting kicked in, saying I need to get rid of my shorts, and then also the, I know, horrible pun, and then the longs actually, a lot of people trying to rush into the stock. So another way that we can look at this to deem if the breakout is valid is to look at some momentum indicators. So if I bring up the relative strength index, I'm going to get rid of the volume pane for just a second, just clear up the chart a bit. If we actually bring this up on a weekly chart, it's actually looking pretty good. So what you see the actual bottom here, and then as this keeps making new highs, you see that the actual relative strength index right here is also making new highs. But there's one thing that's keeping the stock from really breaking out, and that is a breakout above the 60 level. Once the 60 level is broken, I would, just doing the calculation mentally, that would put it above that $16 mark, and that would also mean that momentum has reversed sufficiently to cause a to really give you a breakout in the stock. So that's what we need to look for. But until then, yes, it has done a breakout. Yes, it has given us a buy signal. But you think about it, you're looking for the stock to go up $10. So you can sacrifice about 5% just waiting for a good signal rather than getting it, then seeing the stock turn down on earnings and get stopped out. So this is how I would actually look at it. You really have to be cautious because Omnivision is so linked to computer stocks. So it's very linked to, and here it comes, it's very linked to Apple. And you see a stock chart of Apple, and it can make anyone depressed. So is Apple going to make a reversal? There's a lot of money flowing out of the information technology sector. So it's not really a strong sector to be in. So like even if I do XLK over SPY, like a ratio chart, you see that really technology has underperformed the S&P since April of last year, and just this year has been getting absolutely hammered. So Omnivision itself, it's kind of like a semiconductor stock, but because it's so involved in the computer stocks, like that's the actual people that demand their products, it's actually included in the NASDAQ Computer Index. So if I bring it up on Yahoo Finance, you pretty much see that the computer index essentially topped out back in September of 2012. And since then, it almost looks like it's going to break the lows right. So you actually, if you just look right here, draw a mental trend line, you can see that even some trend lines are being broken right now. So it's really a struggling sector. Now, is this actually going to reverse? That's why I'm giving you these precautions. This is a breakout, but it is on very low volume, as you can see right there, very low volume. And then also you have this momentum resistance on the RSI. So here's my suggestion. Wait until, let me go to a weekly chart. Wait until the RSI on a weekly basis breaks above 60. And also, if that occurs and the stock is above $16 at the same time, then that would give you enough evidence to believe that the actual buy signal is valid. And then hold on to about $25-$20. If I actually do a Fibonacci bracket, we can actually see exactly where we want to put that. We want to put that target. So top to bottom. Remember, this is a longer term downtrend. Okay, so no more than 26.69 is, you would not want to hold it anywhere past there, because that's the Fibonacci retracement. And then also put your stop level, so the place where you'll get out with a loss if we are wrong. Put your stop level at this lower trend line. So we are talking at about, I would say, $14 if you're willing to hold on to a losing trade, or if you're a little more of a nervous investor, you can put that stop as high as about $14.50. But make sure to give the stock room to breathe, especially if you're going to buy before earnings. All right, so that is my stock for today, and hopefully we'll actually see a reason to buy in the future. It's just for now. given the evidence, the breakout so far is shenanigans. All right, happy trading.